it used to be all about the Fed. Now the Fed's got this two-day policy meeting, and we've barely mentioned it so far this morning. Is it still all about the Fed, or is this earnings and China and the economy at this point?
It's all of it. And actually, in a way, it's refreshing that we're not talking about the Fed as much and focusing as much on earnings as we are, given all this other noise. But the fact is that what we're looking from the Fed is a reaffirmation of that more dovish tone on January the 4th. And so the bar is high to really put out that sort of expression of further patience.
Stephanie, I kind of think that's what it is. We've already kind of written them off. They've told us they're going to be more dovish. We believe them. We're not expecting anything this time around. But we are really concerned about what we're hearing on earnings, the economy in China right now, especially with all these companies reporting.
Exactly. And you heard yesterday some bearish sentiment from companies reporting. And, our concern is really around the 2019 expectation. We've already seen earnings numbers come down from 10 to 6, and we really think an earnings recession is still in the cards.
You do?
Yes, we do. If you look at really the ex-US numbers, our concern is that you're going to see weaker numbers. Energy, I talked about this the last time I was on. Now our expectations is we're going to see further downside. You already have some negative numbers built in there.
You think this is coming because of weakness overseas, and these are multinationals that are going to be bringing it down? But you think, or you think that this is something that really catches up to the U.S. economy too?
No, at this point, I mean, we think that the U.S. economy is in good shape. What we're looking at, though, for earnings numbers is if you break down Q1 through Q4. Q1, Q2, Q3, we're at 1%, 3%, 3%, and then you see it jump to 11%. Yeah. So we really think that Q4 number needs to come down quite a bit. And if it comes down to where we are for Q1 through Q3, we're barely positive at that point. And when we see a lot of these numbers coming out, earnings expectations are coming down, and we can be flirting with that earnings recession.
What do you think about that, Julian?
So from our point of view, you've really baked a lot of negativity into the equation. Very clearly, a lot of this is centered around the concern of the slowdown in China. But if you look at China and you look at the currency in particular, the strength in the currency is telling you that this isn't necessarily that China implosion moment that people have looking for the last 6 or 7 years. And what it is a more typical Western-style recession. You're now at the point where stimulus is starting to come into the pipeline, and that's why there's a bit more optimism potentially for the second half of the year when stimulus starts kicking in.
So you'd be a buyer here?
We are. We absolutely are. Our view is you're basically midway at this point between the all-time highs of last year and the lows around Christmas. And we think it's likelier that you're going to test the all-time highs in the middle of the year than retest the lows.